This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Recent U.S. intelligence reports warn that Iran is unlikely to open the Strait of Hormuz anytime soon because its grip on the world's most vital oil artery provides the only real leverage it has over the United States, according to three sources familiar with the matter. The finding suggests that Tehran could continue to throttle the strait to keep energy prices high as a means of pressuring U.S. President Donald Trump to find a quick off-ramp to the nearly 5-week-long war that remains unpopular with U.S. voters. The reports also provide the latest indication that the war, intended to eradicate Iran's military strength, may actually increase its regional sway by showing Tehran's ability to threaten the key waterway.
3 Omani-operated tankers, a French-owned container ship and a Japanese-owned gas carrier have crossed the Strait of Hormuz since Thursday, shipping data showed, reflecting Iran's policy to allow passage for vessels it deems friendly. Iran initially shut the strait, a route for about a fifth of global oil and LNG flows, after US and Israeli airstrikes on Iran at the end of February led to a widening conflict. Later, it said it would permit transits by ships with no US or Israeli links. Oil and commodities markets are keen for signs traffic is resuming. Several tankers and container ships have managed to escape the blockade in previous weeks, but activity was swiftly followed by days of complete paralysis.
Moving on to the top news in the energy sector.
Russia's Baltic oil export hubs at Ust-Luga and Primorsk remain unable to handle shipments after a series of Ukrainian drone attacks, prompting the country's refineries to find alternative routes for export, industry sources said on Friday. The attacks have damaged port infrastructure and continued through the last 2 weeks of March, with at least 5 strikes on Ust-Luga in the space of 10 days. Sources said the export restrictions, along with disruptions at large refineries, could lead to a decrease in oil production in Russia.
Taiwan has received supply assurances from the energy minister of a major, liquefied natural gas-producing country, the island's economy minister said on Saturday, speaking about the Iran war's impact on Middle East energy imports. Taiwan, a major semiconductor producer, had relied on Qatar for around a third of its LNG before the conflict, and has said it has secured alternate supplies for the months ahead from countries including Australia and the United States. Speaking to reporters in Taipei, Economy Minister Kung Ming-shin said that because Taiwan has good relationships with its crude oil and natural gas suppliers, neither adjusting shipment origins nor purchasing additional spot cargoes would be a problem. Next, we have the top news in metal market. Aluminium stocks in warehouses monitored by the Shanghai Futures Exchange approached a 6-year high on Friday, as dramatic price volatility stirred by supply disruptions due to the Iran war dampened buying appetite. Aluminium inventories in the Shanghai Exchange-approved warehouses jumped on Friday by 3.4% from the week before to 470,108 tons, the highest since April 17, 2020. Aluminium fabricators, whose revenue mainly comes from processing fees, are restocking on a hand-to-mouth basis in the face of sharp price volatility, said Liang Minzhu, an analyst at consultancy Aladany.
Iron ore prices extended losses to a second straight session on Friday, and were set for a second weekly decline, dragged down by elevated portside stocks in top consumer China, although signs of improving demand helped limit the drop. The most traded iron ore contract on China's Dalian Commodity Exchange closed daytime trade down 0.5% at 799 yuan and 50 fen, $116.26, a metric ton, posting a weekly fall of 1.5%. The benchmark May iron ore on the Singapore Exchange was 0.92% lower at $105.40 a ton, as of 0700 GMT, recording a 1.7% decline so far this week.
We will now look at the top news in the agricultural sector.
World food prices climbed in March to their highest level since September last year and could rise further if the Middle East conflict that pushed up energy prices continues, the United Nations Food and Agriculture Organization said on Friday. Price rises since the conflict began have been modest, driven mainly by higher oil prices and cushioned by ample global cereal supplies, FAO chief economist Maximo Torero said in a statement. But if the conflict lasts over 40 days and input costs remain high, farmers may reduce inputs, plant less, or switch crops to less intensive fertilizer crops, he said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.